This is Commodity Wrap. I'm Tony St. James, and on a Wednesday, look who we ran into. Brian Hoops was just hanging out here right around the corner. Okay. We're really glad, though, we found Brian and able to connect via phone. President, Midwest Market Solutions. Brian, you and I talk almost on a daily basis, and we normally talk on the TV side of things, but we start the day as markets are just getting ready to get going. But, man, it's really interesting to see where they've actually ended up at the end of the day and whether or not some of the things we talked about early on actually got factored in, i.e., we had some flash sales in corn, and at the end of the day, corn market in the red. So kind of shrugged off the news. Is that a safe assumption?
Yeah, I think it's interesting too, Tony, that, see how we think, what we think in the morning and what we think by the closing bell. Sometimes, they can be different, but, I've done this many years, and I don't recall too many days where the market closes at 120 exactly where it opens at 8:30. It's very rare that is exactly the same. It's usually making a move one direction or the other. There's some news that comes out during the session to kind of influence it or push it in one direction, or maybe it's just all technicals that day. But yeah, we kind of shrugged off that export sales announcements this morning. We talked about this morning. The one that was worded to the unknown destination that we received and then sold, it really doesn't change our balance sheets because the USDA would calculate it as an import, first of all, and then an export. So as a net on the balance sheets, it's really just a wash. The sale to Mexico, 401,000 metric tons, that's a pretty big sale. And, Mexico continues to be our biggest buyer far and away above any other country. Now, we've talked in soybeans how maybe some of these purchases could end up being canceled. I don't think that's the case with Mexico and these corn purchases. I think we will see some adjustments from the USDA and future supply and demand reports. I was surprised they did not change their export profile in this last report. In the December one and the January one, they will make some rebalances as far as these strong exports go, especially when we're talking corn to Mexico. They need to account for that, and that'll tighten up our balance sheets even further. But here in the meantime, I think we've kind of dialed in a lot of the demand news, the strong export news, and now we're kind of looking at the South American weather and what direction do we go from here. And for as far as soybeans go, it looks like the path of least resistance will be to the downside.
Okay. I've got two questions, and I'm debating on which one first, and I guess I'll throw the Mexico out first. You mentioned it. That's a pretty sizable sell, 401,000 metric tons to Mexico. And we also get the news this week that Mexico has become our number one export partner as far as buying U.S. goods. Canada now number 2, and China has fallen to number 3. Do you think this is based upon challenges that China has with their economy, or is this just we gave them a reason maybe to look elsewhere and they found a better dance partner?
Well, I think it's what they prefer. They don't really want to do business with us in the first place. They'd rather buy beans and meal and from South America. They bought corn from Argentina for the first time in 15 years. They would rather import corn from a place like the Ukraine than try and buy corn from the U.S. So they really just don't want to do business with us if they don't have to. And they have to during the fall times of the fall months when we're harvesting to secure some soybeans. So they need to secure enough soybeans to meet their demands, which seem to be increasing each and every year, that South America's supplies are unable to fulfill. And it does seem like each and every year that starts to get a little bit smaller because South America is expanding their production, especially this year. We're going to see a large expansion out of Brazil, and China may need to buy less and less U.S. products if that's the case. So it's one thing is price affordability. It's much cheaper to buy out of Brazil and out of Argentina than to buy from the United States. And I think they would just rather have them as a trading partner than try and work with us and try to have equal partnership or equal trade between the two countries.
Okay. A couple of other ways we can go here, but probably need to take a break. We'll come back and we'll pick up our conversation with Brian Hoops, President, Midwest Market Solutions. This is Commodity Wrap. This is Commodity Wrap. Well, it's midweek and row crops in the red. On Wednesday, we're talking with Brian Hoops, President, Midwest Market Solutions. And Brian, our conversation earlier was whether or not China found a better dance partner than us, or it's tied up in their economy a little bit. It really got me thinking, though. We haven't talked much about wheat. Wheat, though, has just been falling, losing double digits on Wednesday. Is there a chance that an export partner could step up and could maybe dam up this flow of lower closes in the wheat market?
You and I have both been doing this business a long time, and back when I started, when we would, the U.S. was pretty competitive in the world export market as far as wheat. We were probably the third or fourth trading partner that the world would go to. Egypt bought from us, and a lot of these other countries did. And over that time frame, other countries have outtaken the U.S. as far as trading partners with the U.S. as far as wheat. We're probably 8th or 9th port of origin for the world wheat needs. Just too many other countries out there to fulfill those needs, including, not only Russia and Ukraine, but you're talking about France and so a lot of these European countries are becoming net exporters, and we just cannot compete on a price scale with them. So, is there going to be a country that's going to come in and save us at this point? I don't think so. I don't think that's going to be the case. It's more likely, some of this wheat that we have to work through is going to have to be put into some sort of a feed ration, or used domestically. I think it's just going to be such a struggle if we're going to rely on exports for wheat. It's going to be a real struggle, and we are looking at, I think, a stocks usage ratio probably in the close to 50% range. We're just not very fundamentally bullish here for the wheat market, and I'm afraid that may not change anytime soon. I don't know, when we talk about corn, maybe improving its exports, you look at Ukraine having less corn, or China having a poor crop and needing to import more corn, we can see some improvement in exports there. It's the wheat market that, even if another country has a poor crop, we are looking at not filling that void. So I pulled up balance sheets going back like the 2010 year. We exported that year 1.291 million bushels of wheat, and this year the USDA is expecting us to export maybe around 820. It's a far cry from what we used to be 14, 15 years ago.
And I guess the next question would be, at what price do we finally hit where we're competitive? We look at cotton. Average world price for cotton is $57.96, so just under 58 cents, and we're trading at 67, 68. So that's part of our challenge there. We've talked a lot about row crops here, and just a couple of minutes left, but can't let you go without talking livestock futures. And at the end of the day, on Wednesday, live cattle futures were mostly lower, feeders a little higher, and the hog trade was mixed. Any thoughts?
Well, you look at that market, and I think we're going to struggle here for a while. I think in the longer term, another client was asking about this earlier. is, especially with President Trump in office, how does things change? We expect maybe some tariffs or some wars with China over the soybean market, but how does that affect cattle? And, in the longer term, I think, his policies will try to bring inflation down, which is good for consumer demand, and lowering taxes puts more money back into the consumer's pocket. So they would have, in theory, more disposable income, more money to spend on groceries or steaks or beef, and that's what we've been lacking over the last 2 to 3 years. So longer term, I think the demand is going to be very strong, and consumers will come back into the beef market very aggressively. Here in the it's going to be a real struggle for the rest of November, I think. We haven't even talked about the cattle on feed report at the end of the month. I think that report's going to tell us probably more placements or more on-feed supplies here in the near term. And then as we get into 2025, those placement numbers should come down. On-feed supplies will come down. We should see tightening supplies in 2025. So I think it's longer-term bullish, short-term kind of a negative. We're going to struggle. Today's box beef at midday were down. That's despite packers trying to cut their kills a little bit to prop up those box beef. So I would be a little negative here and very defensive if I was a producer in the short term.
Yeah, asking prices this week, 188 to 189, and of course you can ask whatever you want. At the end of the day, it's what somebody's willing to give you is the value of it, and we'll have to wait till the end of the week. We don't have to wait till the end of the week to visit with you, Brian. If we want to talk one-on-one, can we find you online?
You certainly can. You can go to MidwestMarketSolutions.com. We have a list of all of our offices listed there, and we'd be glad to talk markets with you at any time. If anyone has any questions or comments, feel free to reach out to any of our offices.
President, Midwest Market Solutions, is Brian Hoops. This is Commodity Wrap.